Economists, if the West treats China like Russia, it will quickly become impoverished. The price of Pelosi's madness, U.S. trade war with China will bring stocks in the European Union down by 27% or what a trade war with China will cost Germany. The Speaker of the lower house of the U.S. Congress, Nancy Pelosi, flew home from Taiwan long ago, and Chinese maneuvers near the island are only expanding, according to the German Welt. Pelosi's visit could lead to a trade war that would crash stocks in the EU much more than in the US. And the West is to blame for this danger. Beijing continues to threaten Taiwan. If it comes to an attack by the PRC on a neighboring country, then this will most likely put an end to economic ties between China and the West. Economists have analyzed what implications this will have for the economy and financial markets. The Chinese military continues exercises. The maneuvers around Taiwan were supposed to end on Sunday, but China's state television said they were continuing. It was said that the People's Liberation Army of the People's Republic of China would concentrate efforts on anti-submarine warfare and naval offensive operations. Some Chinese commentators even opined that military exercises would be held regularly and could become the norm. Thus, a dangerous atmosphere is emerging around Taiwan that threatens to escalate into a war of conquest. If China does attack Taiwan, it will have dramatic consequences for the global economy. Most likely, the free world will react with the same sanctions as against Russia, when Moscow launched its special operation against Ukraine. The result will be an economic separation of the West from China, with fatal consequences for Western companies and equity markets. China is, by a wide margin, Germany's most important trading partner. The Netherlands and the US are far behind. In 2021, Germany imported goods worth €142.3 billion from China and exported its products worth €103.7 billion there. 6 times more expensive than Brexit. The Institute for Economic Research, IFO, commissioned by the Union of the Bavarian Economics, has calculated the consequences for the German economy of a sudden break in ties with China. It turned out that the separation of the EU and Germany from China would cost Germany 6 times more than Brexit. The German automotive industry will suffer the most from the trade war with China, losing about 8.5% of its value added, or about €8.15 billion. The automotive industry is followed by companies producing transport equipment, which may lose 5.1% of turnover, €1.5 billion, as well as mechanical engineering with a minus of 4.3%, €5.1 billion. Of course, not only German companies will suffer from such a development. Most likely, the whole world will fall into a deep recession, said Joshua Kudin, an investment strategist at investment firm Columbia Threadneedle. Kudin modeled the scenario in case the West imposes draconian sanctions against China. One thing is quite clear from his point of view: China is of incomparably greater importance for the world economy than Russia. Therefore, the consequences will be more serious. He believes that in this case there will be a collapse of rates on world markets. In America, stocks will fall by 20%, in Europe, he estimates a possible loss of 27%, and in the Asia-Pacific region, even 34%. This, of course, cannot be understood as an accurate forecast, says Kudin. It's more about relative comparisons. According to him, the U.S. financial market as a whole will suffer the least, which is explained by the fact that the U.S. economy is more dependent on the domestic environment. In addition, a lot of money from all over the world will flow into the US because it is considered a safe haven. Unlike the US, the economies of Europe and Asia will be hit harder. In Asia, the situation will be aggravated by the fact that Chinese shares in many Asian stock indices have a solid weight. Therefore, the local stock markets will suffer more than others. So, nothing good is coming. However, the IFO Institute went even further in its forecasts. They tried to imagine how events would develop after the introduction of draconian sanctions and the actual separation of the European economy from the Chinese one. An agreement with the US could mitigate the impact. For this purpose, 5 scenarios were modeled at the Institute. In one of them, the separation of Western countries from China was combined with a trade agreement between the EU and the US. Such an agreement could mitigate the negative consequences of secession from China for the German and American economies, although they will not be completely neutralized. The researchers came to this conclusion. However, the expected gains from expanding trade relations with the United States will offset much of the losses from the cessation of trade with China. Ultimately, the absolute losses will be approximately at the same level as the losses from Brexit. If Germany, as an exporting nation, wants to give its business model a new direction, nationalization of supply chains is not the solution that can help the economy, concludes Florian Dorn, one of the participants in the study. According to him, it would be much more promising to conclude strategic partnerships and free trade agreements with like-minded nations such as the United States. That should be the goal of German and European economic policy, he says. But according to him, it would be best if it did not come to an invasion and reason prevailed in Beijing. But this can be difficult. How big they are, shows a post on Twitter by Chinese Foreign Ministry spokesman Hua Chunying on Monday. In it, she quite seriously stated that Taiwan is part of China, including because there are many restaurants serving dishes from different Chinese provinces. To this, other Twitter users noticed that there are many branches of McDonald's in Beijing.